Well, hello and welcome, my loyal YouTube subscribers. Let's jump into this week's video update. Let's start with the market. Right now, the market is in bullish opening range mode. If you put the high and the low of the first trading day of December, these are the two numbers that you would get. We are now above the upper line, which means we're in opening range bullish mode. This is 92% accurate. As a result, I will use it. Now, right now, we are seeing a bull flag. So if you go from the bottom of the bull flag, which is around 4,500, to the top of the bull flag, right, which is around 4,700, you will see that this bull flag, which is a bullish charting pattern, looking to project a move to 4,900 on the SPX, which would be all-time highs, obviously. However, we're not married to one way of looking at the market, because we know that the market is in control, not us. Our job is not to try and predict what's going to happen, but we do have key levels that we're looking at. So that bull flag, that bullish charting pattern, is showing me that the stock market wants to break higher, or could break higher, based on the probabilities of that pattern. However, if it does close below 4652 on the SPX, then we're in neutral range, right? And below 4510, then we're in bearish range, right? Bearish opening range. So anyway, it's looking bullish. It's looking like it wants to move higher. If we look at the Workspace, which gives us a snapshot of the market on one chart, we can see the S&P 500 above the 21 with a bull flag. We can see the NASDAQ here, bit of a bull flag here above the 21. The Dow Jones Transports is above the 21, so is the Dow Jones Industrials. So they're all in bullish mode when we look at the 21 EMA. Now, the economically sensitive Russell 2000 is back within the range, right? Within this trading range, which has been in for quite some time. So that's neutral at the moment. If we narrow down or drill down into the sectors, we can see that biotech has been struggling a little bit, using the 21 EMA as a resistance level. But the two largest sectors, technology and financials, are both just above their 21 EMAs, as is healthcare, as are the utilities. And we can see that retail is in a sideways trading range right now. We can see XLP, which is consumer staples, has broken out of a bull flag, right? Here's an example of another bull flag. From 70 to 73 is the pole. Then we've got the flag, right? And now we've broken out. So based on that bull flag, you could see XLP go to 76 based on that particular charting pattern. So anyway, there's some of the things that we're looking at right now as far as the market goes, and this is all fairly surprising insofar as we just saw the CPI figures come out and say that inflation is now 6.8%, the highest reading in 40 years. Again, the CPI is a very flawed way of measuring the increased cost of living. If you use the same metrics that they used to measure CPI when it first came out in the 1980s, the inflation rate would be 15%. And I think that's much more accurate. And we know that really the inflation rate is not measured by the increased price of a basket of goods that can be chosen. It is really how much you're expanding the monetary supply, right? That's the real inflation rate. Right? And if you're not above that 15% that I believe we're at right now, you're going backwards. You've got to make more of a return than that hurdle rate of 15% to actually grow your wealth. And certainly leaving your money in the bank can be devastating. If you left $1 million in the bank until 2030 at a 15% inflation rate, your $1 million would only buy you $230,000 worth of goods and services. So you've literally lost $770,000 of purchasing power. So whatever you do, don't leave your money in the bank with what's going on with inflation right now. Anyway, having said that, let's have a look at a couple of potential ideas. One of them is Zoom. Now, Zoom has been zooming to the downside. What's a good rule of thumb? Look at what the average person does and do the opposite. Now, we'll look at Zoom. We have been moving down, no doubt about that. Now, what I would look at, though, is a couple of things a little bit different than probably the average person. Now, what we want to look at here is, yes, it's been moving down, but what we're coming to right now is a 165 support level. Can you guys see that was resistance? Broke above it. Now this is going to become a support level for the stock. We're oversold when we look at the RSI, right? Relative Strength Index. Anything below 30, oversold. Anything above 70, overbought. If it's overbought, you're likely to move down. If it's oversold, it's likely to move higher, right? So we're oversold right now, coming down into a very significant, or a significant support level, right? So having said that, though, that's not enough for me to go ahead and take a position. I want to see it's a company that I'm willing to own, right? Longer term. So let's look at Zoom. Click on statistics. Just have a bit of a look at that. What does that say? Could Zoom stock go up 400% over the next decade? Probably. If we click on statistics now, straight away we can see the market cap is higher than the enterprise value or the takeover value. You know, if you take over a company, you get to take all their cash for sure, but you've also got to take on all their debt as well. So looking at this, I can see that the cash is much higher than the debt of this company. I can tell that straight away. Return on equity, very important, 34.64%. Something above 15% is what I use. Now, think of the return on equity as something above 15% is a well-managed company. The owners of the company are getting a return for their investment in the company. And also that return on equity acts as a governor on the growth rate. So, you know, unless they take on more debt or buy back more stock or do something significant, if they leave things the same, that's about as much as they're going to grow. So you want to see something above 15% ideally, and 34.64% is fantastic. Revenue, 3.91 billion, they've booked that. Quarterly revenue growth, 35.2%. Quarterly earnings growth, 71.4%. That's fantastic. We look at the cash, 5.42%, compared to the debt of only 97 million. That's very good. And also the insiders, people that work for this company, believe in the company. Look at this, 13.69% of the people that own the stock are insiders, people that work for the company. They believe in the company. They've got skin in the game. They are aligned with the interest of owners and management. This is good. Held by institutions, 61%. Love that. Now, click on analysts, and we go down to the next 5 years per annum, 13.58%. Excellent. I'm looking for 10 as a minimum. Now, we look at the revenue here on the income statement. Has it been growing throughout the years? No doubt about that. Very nicely. Just want to have a very quick, there's obviously much more detailed analysis I can do, but we don't have enough time. Now, total assets compared to total liabilities. We can see that total assets is much higher than the total liabilities, which is good, right? More than double, which is great. And then we click here on the cash flow statement. I really want to look at the free cash flow. That's really what matters here. Is that growing? No doubt about it, in a very nice way. TTM is trailing 12 months, and you know, what's it done for the last 12 months? And yeah, fantastic. So very good, right? I'm happy with that. So I'm happy to own the stock. So what does that mean? What do I then do? Well, the stock price is 185. What I'm going to do, go back to the chart quickly. I'm going to agree to buy it down here at this support level of 165. I think that's a good price for Zoom. Not 185, where it's trading right now, but 165, right? So what I'm going to do with the stock price at 185, I'm going to agree to buy it at 165, $20 below where it currently is. I'm going to receive $5.05 for every share that I agree to buy. Now, if you sell one put option, you're agreeing to buy 100 shares. So 505 per share times 100, $505 cash in your bank account day one, right? Now, if you do buy the stock for 165, that $5.05 you receive day one for agreeing to buy it at the cheaper price is a 3.1% return. If you do buy it for 165, you have to take into account you receive $5.05 up front, which means that your real cost is only $159.95 and the current stock price is 185. One of two things can happen. It can finish above 165 or below. Come when? The 21st of January next year. If it finishes below 165, you keep the income and you don't have to buy the stock. If it does finish below, we want to own the stock anyway. We still keep the money, but now we do what we said we were going to do and buy the stock at 165 with a cost basis of 159.95. In either event, in either scenario, I am happy. I want to buy the stock Anyway, now ABCL is another stock that I'm looking at right now. Let's have a look at the stock, and it has been moving down, no doubt about that. So we have a bit of a look at that. Big move down. Looked like the IPO was about 12 months ago, pretty much exactly 12 months ago. And since then, we've been going down, down, and more down. Now, we've finally found a level of support here. Now, the stock isn't oversold, but it's not overbought either. Something above 70, overbought, likely to move down, right? So we're not overbought or oversold. We're at a significant support level with the stock, okay? We'll just bring that in a little bit. Okay, and that's where we're situated right now as far as the technicals go. I saw this when I looked at openinsider.com, typed in the stock symbol, looked at purchases for the last 3 months, and I can see here that at prices that are above, they're buying above where it currently is, we can see that the director purchased $1.2 million worth. The chief financial officer. Now, no one knows more about the financials of this company than the chief financial officer. He just purchased almost $1 million worth. 10% owner of the company just purchased almost $3 million worth. So insiders believe in the company as well. So that's good. Now, if we look here at ABCL, let's have a look at it. Click on statistics. Okay, so market cap higher than enterprise value, more cash than debt. Return on equity over 40%, fantastic. I'm looking for something above 15. Quarterly revenue growth year over year, not that fantastic, not good at all actually. And the cash 753 million to 31 million. Now, oh wow. Look at this, held by insiders. Certainly insiders believe in the company. Over 30% of shares are held by insiders. That's fantastic. And institutions like it as well, over 30%. So that's really good. We look at analysis. I want the next 5 years per annum growth rate to be above 10. It's right on the minimum. Let's look here at the financials. And we can see here the revenue growth when we look at the income statement. My goodness me, fantastic revenue growth. Wow. We look here at the balance sheet, and it looks like the total liabilities are like only 5 times less than the total assets, right? So, fantastic as far as the assets go compared to liabilities. Obviously I can do it. Like I said, I could do a much more detailed analysis, but we've got limited time. If we look at the free cash flow, which is what really matters here, we can see we started out negative, positive in 2020, and then through the roof in the trailing 12 months. That is fantastic. So really good looking company as far as the financials go. So what I would do with this company is something like this. Just bear with me. Okay, share price, $13.97. I'm going to agree to buy it at 13, just below that support level. And I'm going to take the expiry on this put option, which I'm selling at the 13th strike to the 21st of January, 39 days from now, right? So if that does, firstly, what's a return? Well, it's a 6% return for 39 days. Nothing wrong with that. If I do buy it at 13, but I receive 78 cents for every share that I'm looking to buy, 100 in this case, if I'm selling one put option, my real cost would be $12.22. If it finishes above 13, I'll keep the money and I don't buy the stock. If it finishes below, I still keep the money and I do buy the stock. So buying this stock at a cost basis of $12.22, that'd be something that I'd be willing to do. So they're just a couple of ideas, some of the things that I'm looking at right now. Right now, the market overall looks bullish, looking at a bull flag to break higher there, but we have our key levels to look at because, again, the market's in control, not us, right? We are simply letting the market tell us what to do, and then we are following in the same steps. So that's what we're looking at right now for the next week. I hope you guys enjoyed that, got something out of it. If you have anything positive to say about this, send it to support@cashflowoptions.com.au, or anything that we can do better, let us know. All right, guys, thank you so much. See you next week. All the best, and bye for now.